Well, in that case, thank you so much, Emerging Europe team, for inviting us all here to take part in what is a really important moment in terms of the relationship between countries, the 23 countries who are described as emerging Europe, and also the United States. Of course, this is such a historical moment for the United States. We are in an election year, a presidential election year. But what's fascinating about today's panel is we're going to really throw forward. We're going to go forward for the next 10 years to see how this relationship will develop towards 2030. So it's an extremely exciting debate. Today's session, for the next 50 minutes, we're going to be talking about never letting a crisis go to waste. And of course, I'm referring to coronavirus. And when we say it's a crisis, it's a global pandemic that has shaken us to our core. We must always remember the 800,000 people, over 800,000 people who have lost their lives to this dangerous disease. And of course, all of those who are still suffering from it, all the people who are working bravely and tirelessly to keep us safe from it. So this today, I hope, will be an opportunity to learn from it and all of us to share something from it that we can go forward. We'll be focusing on social and economic growth, on innovation and entrepreneurship, and on sustainability and resilience. And as you can see, we've got a fantastic panel joining us thus far, but when it comes to technology, we'll wait. I'm expecting a couple more people to join us as well. So what we'll do is, as they're joining us, we will get started. So we're talking about emerging Europe and the United States. And I think it would be interesting just to flip that question a little bit and just work out what it is that the US should be interested about when it comes to emerging Europe. And Anthony Kim from the Heritage Foundation, research manager and editor of the Heritage Foundation. It's an organization, Anthony, that promotes conservative public policies based on free enterprise, limited government, traditional US values. Explain to us, when it comes to the United States, what is in it for the US? Why should they be interested in emerging Europe?
Thank you, Keisha. And then thank you, everybody. Good afternoon there. Good morning from Washington, D.C. We are wrapping up summer season, but we are about to get into a new season. This is not a fall season. This is already intensifying political season. So with that setting, I'd like to mention a few things. I mean, no matter what, this unexpected, unacceptable situation we are forced into, this global public health crisis, really, in my view, highlighted the importance of transatlantic relationship. No matter how you look at, how you argue, there's no question Washington, D.C., and many cities in Europe, many capitals in Europe, we have to talk, we have to compare notes, we have to map out way forward. I think that's where we are. And also, I want to highlight, public health policy is basically economic policy. They are interwoven. Without economic policy, you cannot have a good public health policy, vice versa. Now, this whole pandemic elevated the whole equation. This is really public health, economic policy, and foreign policy. So on that note, no doubt, Washington, D.C. has a growing, intensifying interest and greater strategic, interest concerning how to move way forward with many countries in Europe. So emerging Europe, I think that's a very important venue for us to continue our dialogues.
Anthony, thank you. We touched upon the health situation. Of course, that's something that we will be talking about a lot. But when it comes to the financial crisis that has been created due to this global pandemic, the World Bank, Marcus, is talking about expecting a contraction in global GDP of 5.2% in 2020. Now, Marcus Hines, you're a resident representative for Poland and the Baltic states of the World Bank. Just talk us through the seriousness of this crisis and also the latest World Bank projections as you see them, Marcus.
Certainly, Kasia, and thank you very much. It's a pleasure to be here with you today, albeit only virtually. So never let a crisis go to waste is, in my view, the right kind of attitude for policymakers and businesses in emerging Europe right now. But as you say, we should not belittle the challenge. The economic crisis triggered by COVID-19 is huge and by no means over yet. The World Bank, as you said, is projecting a 5.2% contraction globally. And for Central Europe, which is sort of representative of emerging Europe for us, we can currently see a GDP shrinking in 2020 by about 5%. Also, the share of the population at risk of poverty could rise by 3 to 4% to around 18% in 2020. But these are numbers. We in the World Bank have a mandate to care for the most vulnerable in society. We're interested in what the faces of the crisis look like. So who is, broadly speaking, most at risk in Europe, according to our research? First, low-wage workers. For instance, in Romania, 39% of low-wage workers stopped working in April at the height of the lockdown. A month later, 35% were still not back at the workplace. So that's pretty serious. If you compare this to the higher wage groups in the same country, the number was only 9% in April out of work, and half of those were back a month later. Second, women. 1 in 5 women will face difficulties returning to work. This compares to only 1 in 10 men. Now, this is due to the sectors and occupations where women predominate. Just mention the service sector as an example, but it also points to a higher burden due to childcare and homeschooling under these conditions. Third, younger workers, particularly those in non-standard work types. And also, I might add those who have yet to join the labor market. So the ones that have just left school and are, looking for their first job. These are the people we need to think of first when we design measures to shield vulnerable households from the storm. So that would be sort of my first take of the crisis overall.
Marcus, thank you for those initial comments. You touched upon younger people. Irena, it's good to have you join us.
So just to share with you that actually this is the survey which we used to do for like many years already, and we do have we did have an issue this year actually to decide that we will wait. We will do another pulse survey in the meantime of a pandemic time. So we actually managed to compare these 2 responses by the end of like November, December, and then April. And we compared certain data. And I have to say that we asked several questions. And 1 or 2 which I want to raise here is, first, we asked the young people about the most important concerns which they have. And it was not surprising that actually November, December, they answered that this is climate change, because we remember that it was the time when everyone was so worried about it. We were very interested in how it will change in the pandemic time. And I have a message for you that actually it hasn't changed. It hasn't changed. The highest concern, obviously, quite closely following up now with the health concerns as well as unemployment. The group which we actually interviewed, 30% of Generation Z and 25% of millennials of 25, 30 years old actually lost their job in the meantime. But still, they worries about the wider world are huge. What has changed also, it's their clear leadership and clear commitment as individuals to actually take an action. And it's quite amazing, and it's also giving us all quite a lot of hope that these people want to take an action. What else? We also checked with them how they actually evaluate the activities done by governments, by the businesses. And it was actually quite positive, I have to say, that they actually appreciated the activities done both by governments as well as businesses. And they also, as previously, they were quite, I would say, critic about the businesses' involvement in all of that, but now they also saw quite a lot of hope. There is a sentence which we are mentioning in the report, that not only hope for a better world, but they also want to take the lead, and this is one of the important aspects, which is definitely strengthening what Marcus mentioned just a minute ago.
Irena, thank you. That's fantastic as an opening, some opening thoughts, and it's interesting to hear that there is, even in this crisis, and it's such a dreadful crisis, there is an element of hope. I just want to pick up on that. Marek, when you spoke initially at the beginning of today's event, you said that the Warsaw Stock Exchange, the biggest exchange in Central and Eastern Europe, really wanted to get involved in today's debate organised by Emerging Europe. We heard from Irena that there had been, amongst especially younger people, amongst the millennials, a critical view of business involvement. How do you see businesses building back better upon their experiences of what we've been seeing so far? How do they factor in those concerns and just do a better job of it going forward, Marek?
Well, thank you for this question. Basically, when I was thinking about the panel and how not to waste this crisis, I was thinking about resilience. So how we can be more resilient to the next black swan, as Nassif Taleb called that. Because with our world, which became very complex, we know that inevitable element of complexity is entropy. So there's more randomness around us and more uncertainty. And I think the businesses in the past and the policymakers were focused mainly on trying to avoid risk. So in the policymaking space, we had, for example, let's say consumer safety. In the businesses, we hired a lot of compliance managers and all of limiting the risk. And now the businesses which tend to be more resilient should change the attitude from avoiding risk to quick reaction to the new black swan, whatever it will be, next pandemic, whatever thing. And what we witness in our stock exchange among our issuers, those companies which were good equipped for quick reaction to the crisis performed very well. And just to bridge to the next round, it's not necessarily those who scored very high in ESG factor, in sustainability or something. There are other companies which are quite agile and usually are in this digital space. Of course, being digital is not enough, because we can think about next black swan. It will be a computer virus. It will put down some of our digital identity and digital life. But generally, those companies which can be better in quick reaction, also those governments, like for example, Polish government, which was very quick in reacting to the pandemic, and the reaction was adequate and efficient and saved a lot of jobs, thousands of jobs, is the right approach. So the first take I have, less bureaucracy, less trying to avoid risk, because the things which are unexpected we cannot avoid, but more towards quick reacting to the changes in the environment.
Marek, thanks so much. So let's get Marcin in on this then. We're hearing about the need for companies to be more agile, to be less bureaucratic. Marcin Pedrukowski, you're the Managing Director of S&P Global Ratings, providing independent credit ratings to companies. What do you see as being a successful company when it comes to managing the risk and reacting to what we're seeing right now? Huge job cuts, just a lot of uncertainty, which of course is what business just does not like.
Thank you very much. Pleasure to be here. Thank you for the question. So, it is very difficult to give a standard answer to your question, because every case is different. But to give a bit of a flavor of what we see is we definitely see a variety by industries. This is a crisis which is very different from what we've seen back in the past with the financial crisis. This is a crisis that has impacted on an economic level majority of industries, and it actually came from the real economy. It first hit the real economy rather than the financial sector, what was the case before. So what that means, there is a strong industry component to the impact. So sadly, it was a factor of which industry you are in and the magnitude of how this crisis hit you. So the winners were the ones that were in the industries that were less hit. The losers were the ones that were in industries that were significantly hit. Let's think about tourism. Let's think about hospitality. Let's think about restaurants. These are the industries, not to mention airlines, not to mention the automotive industry. So these industries have been hit the most. Though on the other hand side, I would echo what Marek said around the digital economy. The digital economy is a big beneficiary of this transition and of this revolution which has taken place. What we have seen is we have seen an unprecedented fast pace of I would say digitalization of our economies, which probably in normal circumstances would have taken far longer. In the course of the last 6 months, we've gone through an evolution which has really strengthened a lot of the digital business cases, which so far were yet to be proven. So the industry component is very important. Second is resistance. I would echo the point around resistance. And I would also, Marek mentioned the ESG component, and I would probably bring it up and add a bit of flavor there, because I would probably counter the statement that ESG was not helping. ESG is helping. And what we've seen that companies that had a bigger impact, that had a bigger focus on ESG, environmental, social, and governance criteria, have been more considerate for the crisis. And also the way the investors look at them is also higher. What we're seeing now is that there's definitely more interest, there's definitely more attention, there's definitely more focus across ESG and on ESG. And many companies in the space of even those more impacted industries now need to make rapid shifts to incorporate ESG more into their business story, into the way they communicate both with their clients, with their counterparties, and with the investor community. The investor community has noticed that ESG criteria talk very much about, how a company is able to accommodate a variety of risks that fall outside of the usual, fall outside of what the stock market, the investor community has been so far mostly looking at, which is related to financial criteria. So I would stress that. I would say we've entered a time where, not only does the industry matter, not only your agility and your digitalization matters, but also the way you are able to showcase that you are a bit ahead of the curve, that you're thinking, forwards, and you are able to become resistant across a variety of risks that so far were not so evident. And I think, going forward, what we will see is that we will see companies focusing more and more on these areas, which so far there was a bit of less view on, just because the investor community, the shareholders, the stakeholders were not that interested in making sure that a company invests in those certain areas. Cybersecurity is a great example. I think this is going to be a time where cybersecurity will grow exponentially. Yeah, environmental will grow, social, the way we treat employees, the way we take care of employees in a situation of a trauma, of a difficult circumstance. All of these factors will start to play a more vital role, and companies, and in particular, I think, just to finish off, in Central Eastern Europe, because end of day we're talking about, the emerging world of Europe, there is still a lot of work to be done. Our business community so far, for the last 20 years, 25 years of transition, has focused very much on the plain vanilla, typical financial risk management type of aspects. All of these other aspects have been left aside or have been focused with specialized entities. What I believe will happen, we will see this blending and this becoming even a bigger catch-up story for our part of the world, because believe it or not, the Western world side and the US are far ahead of us.
Marcin, I want to pick up what you were talking about with in terms of ESG. Irena, I know Deloitte has been looking at this in terms of the long-term corporate strategy. And thank you, Marcin. That was a really some loads of good points there that we'll pick through. Deloitte has been looking at this environment, society, and governance. What Deloitte found, does that echo what Marcin has been saying, that there's more interest in this when it comes to businesses just going forward?
I can very much so, and I have to say that I dedicated my business life, like last 20 years, into that agenda, and I never seen so much interest and so much serious care of that issues as now. And obviously, I believe there are at least 2 or 3 kind of reasons for that. And definitely the regulations which are coming, the sustainable finance agenda, which is actually requesting or requiring businesses to actually much more consciously manage their plans, their development plans, their investments, and measure it, and potentially get access to capital in line with that. This is definitely a huge driver. The second one is something which we already discussed, like young generations' expectations and the level of general awareness. But the third one is actually something which Marcin also has touched on, is actually the kind of awareness of the risks and the need of resilience in the future. And actually, the risks which we are discovering now related to something very unexpected, they may be much stronger in the long term when we think of a climate change impacts. And this is actually something which I believe it's like a waking moment for many to think and to predict and to plan. And the research which you are mentioning and which you are relating to, which we did in the US actually, discussing with many boardrooms, there were clear conclusions that, first of all, the boards are much more aware of an importance of that. The second of all, they see their role in kind of guiding organizations through expecting their kind of contribution and impact to wider society. So this is also very, and it's not like just the kind of like philanthropic activities, but it's really very meaningful contribution towards taking care of people as employers, as obviously the unemployment and everything what is happening on the labor market will be a huge challenge, of local communities which are around and which business is actually dependent on, as well as obviously environment. And this becomes definitely much stronger than it never was. And as many expected, what crisis pandemic will actually make to that agenda, and everyone is actually quite afraid of that. But I definitely see even more serious approach to that, and very much looking forward that the winning businesses will be really the ones which will be able to take these risks seriously, and they will get prepared for being in a winning position soon.
Irena, thank you. So on that note then, Anthony, I want to bring you back in, because as Heritage Foundation, as I mentioned at the beginning, you're talking about free enterprise and limited government. Irena talked about boardrooms in the US seeing their roles, being more conscious of their roles on the impact that they have on wider society. Does that need more government influence? Do you need more governance, and do you need more regulations when it comes to getting that sustainable finance? Do we need more government involvement when you've got such a huge pandemic as we've seen over the past 6 months or so?
Not necessarily. And also, I want to say, I think my advantage or my resource to you all is that I just want to share, at least convey, kind of a view from Washington, D.C., because I'm the only one, I guess, based on outside Europe for this session. And to be more useful and informative, I don't expect you agree with me, but I think it would be mutually beneficial if we can bring in some other perspective. So having said it, I think Marcin and Marek, I think they basically touched upon key elements of what we should do. I mean, basically, in order to restore public health, economic health, even the health of transatlantic relationship, and also get to the next level of resilience, I don't think government only can do these heavy tasks. I think this is a time for us to work together, governments to governments, business to business. I'm talking about the private sector. And also I want to put in civil society, because now this whole pandemic, as Marcin pointed out, it's not just one industry only crisis. This is across the spectrum, across the industry spectrum, across political spectrum, across many things. Nobody is immune from this unacceptable crisis. We never had this kind of situation in modern age. And also there are many other foreign policy components, I have to say. I think this is the first crisis that China somehow got into directly involved in this 21st century. I mean, we had a 9/11, we have a 2008-9 financial crisis, and now we have this, public health, and now potentially full-blown, economic turbulence. And China is at the center of the whole unfolding story, whether they want it or not. So my bottom line to your question, Kesa, this is really not about just one government or one international organization come up with a solution, follow everyone, I have solution. It's not that kind of setting. I think we need a dialogue. We need to get through this turbulence and then try to come up with a common solutions together. And I think we can do that.
Anthony, thank you, and really appreciate that your view is the one view we have got from Washington. And given the subject matter of this debate, it's great to have your just impetus on that. Marcus, let's just pick up on some of those points that Anthony was mentioning. Can it be, representing the World Bank? It's an organization, a global organization. Can governments do something further? Can they, or is it down to individuals? How does the World Bank see it? And I know that you've got your regular economic report out as well, so you've got a bit of insight into what's happening.
Yeah, so I think Anthony is right that this is a crisis that is bigger than just what you normally find in textbooks, right? So coordinating the health, economic, and social responses needed to navigate a pandemic is one of the most complicated challenges a society can face. And the uncertainty on all fronts means that the need for key institutions that support resilience has never been greater. And those institutions are not just government, it's the combination. It's all the stakeholders around the table. I mean, from what happened in 2008 and 2009, and I take the point that this was a different type of crisis that originated in the financial sector, I still believe, or we believe, that you can draw some lessons of sort of how countries or systems more generally can deal with such an onslaught. And those countries that dealt well with a Great Recession, they had well-functioning formal and informal institutions. They had effective coordination between stakeholders, right? And they had what may be the secret sauce in all of this, high levels of trust between relevant actors, not least of which between government and businesses. I mean, there will be tough trade-offs between the fiscal costs of lockdown support and the need to devote resources to recovery efforts. And people and businesses will need to have confidence in their governments making the right decisions. This kind of trust has to be nurtured by governments through transparent, fast and fair action. And it was mentioned before that, for instance, in Poland, this seems to have worked well. In our representative samples, we can, for instance, see that Polish businesses have received fast support, and almost 2/3 of them reported that they were able to take advantage of public support measures. Now, this is good for building trust.
Marcus, thank you. In that case, Marek, is that something that you would concur that Polish businesses there is an element of trust there, that the government, I guess, ultimately there is a combination of measures that is getting it right?
Exactly, because it was very fast reaction and very simple program. I mean, especially for SMEs, it was semi-automatic or almost all automatic. And this is simplicity is the key answer to the question. And I'm following what Anthony was mentioning, and Marcus was also following up. Of course, it would be great to have a coordination on a global scale, but in the space of principles. In the details, we have to be agile and very simplistic in the approach. That's why I'm a little bit worried that some, especially Western European countries, are putting their navigation into nationalization of some businesses, or even more role for the European Union or for the local governments in the economy. I think the best answer to this kind of unexpected and uncontrollable crisis is free market and quick reaction of the government. So less policies, less complicated law, just simplification of law, free market, and a quick reaction, very targeted reaction from the government. And good example is, by the way, stock exchange, when we talk and compare the crisis. For all the financial crisis, 2008, 2009, all the stock exchanges were working very smoothly because they are very simple, they are market driven, they are fully digital. And in this crisis also, we had, for example, a tremendous growth in our trading volumes. We are, in terms of increase in trading volume, number 3 in whole Europe, but we also benefited from the great involvement of the retail investors. The share of retail investors increased from 12% to 22%, but people realized that they can make money on the depreciated stocks, and they started to buy them. And then some of them made really a lot of money on that, because if you were buying in March, you doubled your wealth by today if you just bought an ETF or whatever. So basically you see that market forces together with a quick agile reaction of the government is the key to success. And long-term contemplation, building up regulations, this and that, and that actually hinders the quick reaction. And the good example is European Union. The reaction for the European Commission was much delayed, very slow, and plenty of countries in the emerging Europe which were quicker to react than the European Commission. So my call is again for less bureaucracy and more free market. What we can, by the way, learn from the Americans, where they're still in the US, you have more free market. And coming back to ESG, just very briefly, Marcin, I mean, last few days, Financial Times published some research on that, and heavily ESG stocks didn't perform better or worse than the others. And actually, the ESG, the stocks which performed well was tech stocks, which are ESG compliant because they do not have that much CO2 footprint. So basically, we have to reinvent how we measure the ESG, because the sustainability factor was not sustainable for this case, especially for the industry. We have very dispersed supply chains. Those who source here in Brazil, here in China, here, there, and that, actually were hit very hard by this crisis. And those who were close to their customers and they were manufacturing close to the end customers actually benefited. So again, call for simplicity, and maybe we should exchange the sustainability factor in ESG for simplicity factor, and this will help the companies survive the next crisis, which will be completely different from this one.
Marek, thank you so much. And just so that the point on the EU, of course, we don't have an EU representative here on the panel, but I'm sure they're going to say something slightly different. But Marcin, in terms of what Marek was talking about, is that what you're finding as well when it comes to the companies, that less sort of overall control from government? And you also touched upon this ESG, the fact that people just are expecting it now when they're looking at companies and also investment opportunities.
Thank you. So so the first point around whether, I think the speed of reaction is very important. I fully agree. And we do have, great examples of how speed made a difference. There were also examples of countries in the Western world that played it out very well. Let's look at the UK. Let's look at Germany. Let's even look at France, where there were a few, strong programs dedicated, mostly run by the central banks, to fuel liquidity to the markets. What we don't need to remember that the biggest role that the government needs to play in such a situation is to be a transmission belt between public funds and private funds, private investments. So effectively, these programs have been created and should be created to restore liquidity, investments, and durability into the private sector. So, I just want to avoid a misconception that public funds on their own are the cure. They are not the cure. They are the transmission belt that will only work efficiently if it is deployed rightfully to the public sector. Because end of day, all economies are dependent, or in a healthy society should be dependent on public funds, on public businesses, on public deployment of capital. And I think that's where these programs have proven to work well, when they were a transmission belt that allowed the public community to help streamline activity and investments and employment and development into the private zones. I think that's very important, and this is a great lesson, which, by the way, the policymakers have learned that during the financial crisis. If it hasn't been for the financial crisis, we would not have such a quick response by the government. So if we're talking about don't let a crisis go to waste, this is what happened with the financial crisis. A big lesson from the financial crisis was that we've learned how to deploy quantitative easing, how to deploy liquidity into the marketplace to make sure that in a relatively quick time frame, we are able to, withstand the shock from a deployment of capital directly into the private sector. So that's one comment. Second comment around ESG, and I fully echo what Marek said about the fact that indeed, the stock exchange still doesn't really take full advantage, but as we are all aware, the stock exchange is a bit of a different measure. We're talking about longer term investors. That's where ESG today plays more a role for bonds, for the DCM market, not for the equity capital market. The equity capital market is still quite traditional. It's still very much based on results from quarter to quarter. It's the bond market with the long-term investors that factor it in. And I think, again, nobody is saying that the diameter has changed. Nobody is saying that we have, moved from point A to point B, directly. What we are outlining is that there is a trend, and that trend has significantly accelerated. It has significantly accelerated, again, fueled by COVID. And again, let's also remember that ESG, it's not only about environmental, it's not only about sustainability. We have 3 standalone components, which are very, very wide. One of them is environmental. Second is social. So everything which is related to the way the company treats its employees, the way it interacts with suppliers, providers, communities, all of these type of things. And last but not least, governance. So how is the company governed? And you're right, some digital companies don't have a carbon dioxide footprint, but they actually have a very strong component of the S and the G, because they're very much, human-based businesses. So I would encourage us to start looking at ESG as a far wider topic than only sustainability and environmental. This is indeed, those are the building blocks. This is what, in a way, has created this concept. But now this concept for the investor community, for the business community, is far wider. And it spans across, a variety of risks, a variety of components, which needs to be factored in, where the environmental piece is important, but it's only one of many, not the one and only. Yeah. So I think that's an additional component which is important to raise, which goes back to the point that some of us are making here, that the society is going through a change. The society expects more from businesses, both as clients, buyers, when they invest money and when they are employed. And hence, focus on financial results, it's a great short-term strategy, but for the long-term run, the expectation is now to look at a more holistic set of features, ESG being one of them. And by the way, we see the same differentiation within the sovereign space. Yeah, we're talking about the public area. Sovereigns are also starting to differentiate themselves by ESG criteria. And therefore, sovereigns, indeed, sustainability and environment and the environmental policies are very important. If you look at the Nordic countries, you can see that there's a strong differentiation how they approach that subject. Why? Because again, when they talk to both their societies and their investors, they have a bit of a different story to say. And they again look at it more longer term, anticipating that these trends will become more mainstream going forward.
Thank you so much. So let's just recalibrate, because we're also talking about, of course, the relationship post-COVID. Well, we're still in the midst of COVID, but also going forward when it comes to the United States. Anthony, I know you were nodding quite vehemently in agreement with some of the points Marcin was mentioning there. In terms of moving forward to build that sustainable relationship between emerging European countries and the US, how, I'm assuming, is there alignment in what the kind of noise, the music that you're hearing from Washington?
Indeed, I think, obviously this is not US-EU official diplomatic dialogue, but I really feel, coming from the private sector, I think we are not far from each other. I think we have a lot of common denominator here. And I think this is really about doing fine tuning and some realignment. But I think our willingness to get through this together is definitely there. And having said it very quickly, I'll make 2 points. While we are trying to get a big picture strategic, coming out of this pandemic, I think it's also important to talk about some more specific, practical policy venue United States and a lot of European countries, especially emerging Europe, can cooperate and collaborate on, and how to make things move forward, at a micro level, as well as, once again, a big strategic picture. To me, we have to keep in mind PPP. I mean, PPP is not public-private partnership or purchasing power parity in this case. PPP in this case is politics, policies, and people. And luckily, I think United States and emerging Europe, we do have those three aligned through the prism of, as you may know, something called 3Cs initiative. This is a huge, huge economic foreign policy interaction between Washington and many countries in emerging Europe that's part of 3Cs initiative. This is really about making Europe better, not only in terms of physical infrastructure, but human infrastructure, digital infrastructure, investment infrastructure. So I really echo Marcin's point and Marek's point. I think we do have a fundamentals, the basic ingredients that United States and emerging Europe can cook together and have a wonderful festivity as we move forward. So the key is how we can make it a success. And good news, this is my last point. October, there will be a 3Cs initiative summit in Tallinn, Estonia. I think that's a very important milestone right before the election. And after some initial, whatever, entertaining debates and all that in September. So watch what happens in Tallinn, Estonia, out of this 3Cs initiative. I think Washington is quite willing to make it sure this is really a project, an initiative that we want to pursue here. And I think this is go beyond November 3rd, actually. So this is not a one-shot deal, but I think you can expect a high level of discussions.
Anthony, thank you. Absolutely crucial to mention the 3Cs initiative. We've got literally 3 minutes left. So a sentence from all of you. Marcus, I'll start with you first. Just a sentence on where you would like to see the relationship going forward. And in a sentence, I'm going to be quite strict with the timings now.
Sorry, just had to unmute myself. And that was not my sentence. The World Bank is not part of the dialogue between the US and emerging Europe. But obviously, we as a knowledge bank and a bank that promotes business activities and cooperation across the globe would like to see this grow and go in a direction that allows everyone to compete fairly, and particularly in the digital space. There's some additional things I would say about digital, but I would need more than one sentence.
We're always out of time, unfortunately. Marek, representing Poland, what's your take home from this?
The emerging, coming maybe to the Anthony statement about 3C initiative is for me a role model for the cooperation between emerging Europe and United States. And for me, the key element is to bring closer the region, emerging Europe, to the attention of the US investors, because I fully agree with Marcin that public aid alone is not enough. We, as a region, emerging Europe, we need to import smart US capital, not only to face the crisis, but just to grow our economies.
Irena?
If I'm about to leave you with one sentence, I would say
Irena, we're struggling to hear you, so we're just going to go to
believe
Martin,
in kind
and
of
then I'll come back to you.
stakeholder capitalism. Something.
Martin, over to you. One more sentence, and I'll come back to you then, because I just missed that.
Thank you. I fully echo what was said before. I think what the US does very well is blending public and private money to create successful ventures and allows private money to piggyback off public ideas, initiatives. In our part of the world, we are not able to do it rightfully yet. We have the big blessing, but at the same time curse of European funds, which have been fueling a lot of money to development, removing the private capital from that space. So I think one key takeaway for me from for the post-COVID world is to learn and partner with the US on best practices, how to blend public and private funds together to create long-term, sustainable, of course, profitable projects for the benefit of the society and the community.
And Irena, back to you.
Okay, let's try. So for me, the word is actually stakeholder capitalism, something which I truly believe will be a term being used more and more, where the needs, the cultures and the expectations from many different stakeholders are taken into account and are the engine for growth and for actually achieving success.
Okay, well, and Anthony, we had a long comment from you, so thank you so much. I'd just like to thank all of our panelists for exceptionally dynamic and a very frank and honest conversation about emerging Europe post-COVID, and of course that relationship going forward with the United States. Thank you so much to everybody who joined us virtually watching this session. It's always a bit of a challenge when we do these kind of events online, but I hope that everybody has taken something back from us. We've got a 10-minute coffee break, and then we've got a energy and climate change debate coming up. So do join the next team. From me, from my guest, thank you so much, and a big thank you to the Emerging Europe team for organising what is a very important event. Thank you and goodbye.